Alright, it's Monday and it's a new trading week. Earlier I posted a video about Dogecoin, so if you are interested in a Dogecoin technical analysis video with some fantastic levels that have been so perfectly respected, go check out that video and look for the trades that have happened just recently and a few trades to be looking for in the near future. For this video though, I'm going to be looking at the Bitcoin charts, and starting off, I've just got this 4-hour chart open for some context. I'll mostly be looking at this local range here, but I'll also look at a level to the upside beyond this level, beyond this range here as well. So to get started, I'm going to look at the first level to the downside of this local range. Right here, there are imbalances in this impulsive move upward. In confluence with this golden pocket, I'll remove that 786 for now. This golden pocket pulled from this low to this high. What's happening right here is price is coming down and front running this level a bit. So what's happening? Our longs are entering here. Additionally, longs are entering here, and really all through here for late longs. But price is front running this level a bit, which makes me think that this could be a bit of a tricky trade, and we might squeeze through. Because what's happening is all of those longs that are entering are putting their stop losses down here. So if a large trader wants to enter the market, they have to generate enough liquidity, or they have to get enough people to sell to them. The way to do that is to hit the stop losses of the longs. Because when a long has to cover their trade, it's equivalent to a new short. Additionally, if price comes down to this area, in addition to those longs covering, which is, again is equivalent to a new short opening, more shorts are going to be coming in, the breakout shorts that are trading, and I'll move down to the lower time frame, that are trading this range. When we take this low, short traders are going to look at this as a break down from this range, and they'll start wanting to enter shorts here, which, by the way, is not good risk to reward. Nonetheless, they will do it. So there will be both new shorts coming in from breakout traders and the equivalent of new shorts coming in from longs covering. This is going to provide relatively significant selling pressure at this level. This makes me think there would be a squeeze downward, possibly. Now, when and if price gets to this level, I'll be watching for that. But price could come down and tag this level and then move upwards, which would provide a higher probability long from here. The reason being is that this is a low volume node, so price does not like to hang around in these areas very long. So when price quickly comes down into that low volume node and tags a level, it's a higher probability that it's going to bounce from that level rather than to squeeze through. But when price consolidates above that level of support, or conversely below a level of resistance, it's more likely that when price comes down here, it will squeeze right through to the next high volume node, which is right here in this area. Now notice that the 786 is inside that high volume node. Additionally, if you go to the daily time frame, you'll see that the last daily level is right here, from the close of this daily candle to the open of this daily candle. This is the last daily level of support before, what is it, further down 15K or 13, 12K. Currently, I'm not looking at those levels. I'm looking at the more recent time frame, so I'll go back to the hourly. But you'll see that in that high volume node, there's a daily in confluence with the 786. So it's very much possible that we range here for a little bit more and then squeeze straight through that golden pocket and into this daily. If we do that, that will provide a decent probability long trade from around this level. And if you wait to see if this forms a few swing lows before entering, you can get a better risk to reward, put your stop loss under those lows, and take the trade upward. Another way to take this is a bit more aggressive, is to enter as soon as price comes down into this level and put your stop loss somewhere below these lows, with the intention of price moving upward again. Now, if you're going to do that, make sure you're aware of where you're putting your stop loss. If price comes down here, moves upward, you enter long here, you put your stop loss down here, notice that you're putting your stop loss at a triple bottom where everyone else is putting theirs, right here. So while this can be a good day trade, maybe even longer than a day, keep the trade throughout a week, or maybe even just scalp here, be aware that on the longer time frames, it's very likely that price is going to come down at some point and take these lows. So those are the levels to the downside and how I'll be approaching them and thinking about them. Now I'm going to look at a level to the upside. So I'll toggle off these downside levels. To the upside, what I'm seeing here is price making consistent lower highs, one after another. It's forming this kind of trend down. So what's happening is shorts are entering at every swing high here, pushing price lower. But that also means they're putting their stop losses above each swing high. So what you have is a cascade of stop losses above these swing highs. Now, when a trend line is well established like this, by the time most people notice it is a lot of times when the trend line breaks out. But what happens is people are just going to continue shorting this for as long as they can, adding to the cascade of stop losses. But I do expect these highs and these stop losses to be taken, especially if we are going to make lower lows in the high time frame. But nonetheless, I do expect these stop losses to be taken. So what I want to do is look for a level above these stop losses where I could potentially take a short. Now to do that, I've taken a golden pocket, Fibonacci, from this high right here to this low right here. Now, I pulled it from this high, and part of it's just from experience. But because it's the first bit of buying interest after we exit this range here. And it's not perfect, but you can see there's a bit of a range here. But most of it really is just due to experience and being able to quickly see the key levels to pull fib levels from. Additionally, there's, like I mentioned, liquidity above this trend line, and there are imbalances. So there's inefficiencies in this move down. Inefficiencies like to be corrected. So a lot of times you'll see price move to correct those inefficiencies and fill those. Additionally, you have a daily naked point of control here. So there's plenty of confluence here. And it comes immediately after this low volume node. And while there's not a whole lot of volume in this area, it still is an increase here. So when I see this, I'm thinking if price moves up and begins cascading these stop losses all through here, and price gets through this point of control, this high volume node right here, it's going to move very quickly to the next area of higher volume, which is right here. Additionally, this purple line right here is a anchored VWAP for the month of November. It's a monthly anchored VWAP. And you can see that this VWAP is starting to come down and flatten out around this level, which could, depending on timing, become another level of confluence for this zone. Now, what I want to be aware of, and I'll go back to the daily time frame here, is that this is going to be the first daily level to the upside. And daily levels do like to be hit. But if we come up to this daily level right here, we might as well continue upward taking liquidity. So while I'll be looking, I'll go back to the hour time frame. While I'll be looking at this zone for a short and stop loss to be determined later, while I'll be looking at this level for a short, I do want to be aware that we could just squeeze through. And additionally, one of the reasons I think we could squeeze through, I'll toggle on my Addis right here, and I'll go to it, and I'll show you the range that we are in currently. This is the daily chart, is right here that I was just looking at on the trading view charts. Now, what you can see here is that the cumulative delta is making lower highs and lower lows, while at the same time the open interest is increasing. This means that there are a significant amount of new shorts coming in. The open interest shows there are new trades. The cumulative delta shows which way those trades are going. The problem I'm seeing for those shorts is that they're actually not moving price very much. And let me modify those big trades and delete those because that was getting in the way. But you can see here that price isn't really doing what the shorts want it to do. It's just ranging sideways. It's moving sideways. So if you have a lot of shorts coming in, you would expect price to go downward. But price isn't going downward. This shows me that there are longs. Longs sitting here under price, absorbing all of those new shorts. All right, this is the market maker or the market mover showing their hand. And they show it through these cumulative volume delta divergences. You can see that there is someone or group of someones sitting under this price action with their limit buy orders absorbing those shorts. Currently, a situation like this is considered a bullish situation. I'll go back to the trading view chart. Right here. And we'll get back to the chart. So currently, there is a bullish CVD divergence here. So we know there's a very large trader sitting right here absorbing all of that. So this is a reason to push price upwards. And like I mentioned earlier, talking about all the short trades that are coming into this trend line, there's a good reason to push price upwards, especially if you're a very large trader who's trading hundreds of thousands of Bitcoin. If you want price to go lower, the only way you're going to participate is if you get a lot of traders to buy from you. The way to do that is to take these stop losses. But I do have an additional level to the upside if price decides to squeeze through this level. I'll toggle this level off. And it's a bit messy, but I'll clean this up. First, I'll pull this fib. And I went to the linear scale. I think the confluence is a little bit better. But I'll pull this fib from this high here to this low right here. And what you can see is that it's in perfect confluence with this high volume node over here, right here. Additionally, it's where price was ranging around this area. It's also really thin through here. This is a really thin move. Moves like these tend to have a lot of imbalances, a lot of inefficiencies, and like to be revisited. Additionally, there's a daily naked point of control up here. And Bitcoin, especially lately, has been doing really well at cleaning these daily naked point of controls up. Right here, there's an SR flip. It's close to the 786. It's right above the daily naked point of control, and it's in confluence with this high volume node here. There are some imbalances in perfect confluence with the golden pocket with this high volume node. And additionally, there is a high volume weekly order block here. So if I go to the weekly chart, you can see this order block. I'll toggle this drawing off real quick. You can see this weekly candle right here, and then this weekly candle with high selling volume forming an order block. Now I'll go back down to the hourly time frame, or actually 4-hour time frame. So if we're to squeeze up and take all of those short stop losses, it wouldn't surprise me if we squeezed up, took those stop losses, longs entered, and we hit this level and found some type of resistance here. Now, I definitely need more information, more data when price comes up here. It's always possible that we squeeze right through, but I'll be looking for a front run, because if we consolidate below this resistance, then we might get a squeeze through, and I'll be looking to the next level. But notice in the case of that, we have a low volume node right here. So if the case is that we do squeeze through here, it'll be really quickly. And the next level of resistance is going to be the 786. So these are two levels to the upside that are not within this range here that I'll be looking at for potential shorts. That's all I have for this video.